So Warren Buffett, arguably the greatest trader ever to have walked this earth, has just made his biggest trade in over 4 years and finally spending some of that massive cash reserve he's built up over this whole pandemic. If you want to know more, stick around after this. So you may or may not know that Berkshire Hathaway, Warren Buffett's firm, have been sat on a record amount of cash, a record amount that they have ever held on the file. Now, you may think, okay, it's a couple of $100 million, big woof. No. If you had this amount, you would instantly become the richest person in the world from the current statistics. 137 billion US dollars. That's what they've been holding in cash throughout this whole pandemic, or at least since the end of March. Until now. But we'll talk about that in a minute. Now, this 137 billion US dollars, crazy number. I still can't get my head around how that much money can just be sat on an account somewhere. Now, having that much cash has come under massive criticism, with Warren Buffett getting close to 90. Happy birthday when it comes. He's come under massive fire that he's actually sold his airlines in the middle of COVID at the lows, and he's really not making any purchases. And given that the SPY in the US equity market has gone up over 40% since its mid-March lows at the recording of this video, it seems he's missed the boat, or has he? Now, I've seen a lot of people on YouTube saying that he should have bought tech companies. I've seen a lot of Bloomberg people saying, why isn't he investing into e-commerce or other sectors that we know are going to perform quite well? E-commerce especially is a personal favorite of mine, especially for pension planning and things like that. But Warren, for some reason, is very bearish on the overall market, and he isn't afraid to say it. And he has a very, very famous, arguably the most famous trading quote out there: be fearful when people are greedy and be greedy when people are fearful. And right now he sees the market that people are being greedy, and equities and the market in general is overvalued. He's also known to jump onto value investments, company that he sees the value in. He's always stated that, you know, no matter what the currency, whether it's cash, chickens, or even gummy bears, I can't remember the exact quote, but people will still spare their time to get a job to go and buy Coca-Cola or, you know, some, I think it was peanut butter he mentioned in that quote. I'll put it on screen now. But his whole point is, cash is only cash, but there will be value coming somewhere, and the working people will always drive value. And I think that's what he's getting at with this cash build personally, that he's sort of waiting for the right opportunity to pounce. Working people are sort of coming to the peaks now in COVID, coming back to work, and the economy hasn't really paid back this bill that COVID has produced. And I think that that might cause a big sort of correction, recession. We can do that in another video. But what are your thoughts on that? Let me know in the comments. But again, still, Warren, regardless of his past performance, people are always, especially in this day and age, jump on the bandwagon and saying he is past it, he is over the hill, he is on his way down. He's missed a 40% market move, which he is. There's no hiding that. But given the fact that he's bearish, he hasn't changed his stance until maybe now. But before we get into the purchase of the company which he's bought, please let me know what you think. Has Warren passed it? Is he just starting? Is he over the hill? Let me know your thoughts on if you think Warren Buffett still knows what he's doing. So given the fact that they have record cash and they've just gone out and spent 9.7 billion, or pretty much 10 billion US dollars, 7% of their cash reserve on one company sort of is again coming under fire, because is he jumping the gun because of the peer pressure of the market and the people criticizing him that he's sat in so much cash? Is he just trying to get a bit of diversification, or does he see genuine value? It's causing even more controversy in the finance world. Now, we all know that renewable energy at some point will come into play, but Berkshire Hathaway think that this will happen around about 2050. And that's actually come apparent across a lot of firms, including Goldman Sachs, Morgan Stanley. All these figures have always aimed around 2050 at the earliest, I think, personally, because I think oil and gas are so cheap, I can't see renewables taking over in this time period even. So that comes to his purchase of Dominion Natural Gas. Now, natural gas has took a beating, oil has took a beating. These things are really, really cheap. Now, when it comes to the purchase, he's bought the company for $4 billion and also acquired its debt of $5.7 billion, which sort of could be classed as like an aggressive purchase, really. I mean, that's a lot of debt for a company only valued at $4 billion. But he sees the value in there. Now, Dominion natural gas, what do they do? Well, first thing, they're not upstream or downstream. Now, upstream and downstream, upstream is when you get stuff out the ground, and downstream is when you sort of manufacture it and sell it. Now, there's a middle ground there, which is transport and holding. Now, if you go back to the Brent oil crisis or the WTI oil crisis or just the oil crisis, where oil actually hit negative numbers, there was a few companies out there that made a hell of a lot of money buying these oil contracts and just storing the oil, because quite simply there wasn't enough place to store the oil. Now, Dominion Natural Gas, they are a storage facility and they own a few pipelines. So that is the sort of sector that they're in the natural gas sector. They may branch out, they may go to renewables, but that is the sector they're currently mainly focused on. Now, this purchase is the biggest purchase Berkshire Hathaway have done in over 4 years. So I'm sure that they haven't jumped the gun, but again, it's coming under a bit of fire, especially given the natural gas prices and the way the world is heading to renewable energies. So that in itself is a discussion which I'd love to have with people in the comments. Natural gas, is there a future there in the next 5, 10, 15, 25 years? Let me know in the comments. And of course, make sure you've hit that like button already, please. It helps me out. But what are my thoughts on this purchase? Well, I think personally that Warren Buffett is a very, very famous value investor. When he tends to buy things, it is the typical buy low, sell high. And I think, yeah, you know, he sold his airlines at the lows recently. That is understandable in my opinion. I think anyone holding airlines throughout the COVID crisis, when we didn't know how long this thing was going to last, or will last, should I say, I think that was a sensible move. And if he's bearish on the overall market, I think that was personally a good move. But he is famous for buying things when they're pretty much, in a British expression, on their arse, and there's only one way up. But given the sector it's in, it's going to be under quite a lot of scrutiny and criticism, which we've seen already on Bloomberg and all the other news channels. But again, given that renewables are not looking to be coming into play until 2050, that's a lot of growth for that time. I mean, that would mean Warren would be 120 at this time. So, I mean, I hope I'm wrong, but unless they freeze him, he might not make it that far. I hope he does, to be clear. I'm not wishing anything bad to him, but the likelihood, you know, he's not going to be able to see out this deal go wrong, in my opinion, if the 2050 renewable target is seeable. But I also understand the side of people who are saying Warren is past it, given the fact that he is coming up 90 and he's just made the biggest deal in 4 years, and also spent a lot of cash from his cash reserve, but still has a hell of a lot of cash there, which would make you in the top 3 richest men in the world with the leftover, then I think that people are always going to assume that the guy is past it. It's like when you get an old person driving a car, you know, at 100 years old, they shouldn't be driving a car. But reality is, it's a state of mind, state of physical body, and I think Warren is quite a healthy guy. So yeah, I think he made this decision with a conscious mind. I don't think he's going crazy. But is he feeling the pressure from other people and that he's got all this cash? Is he panicking that he's got so much cash in account? Maybe. Investors may leave if they don't see the returns, which we have seen a bit of stagnant growth in Berkshire Hathaway over the last few years, given by this chart. And that said, in fact, actually, they've underperformed the SPY in a few previous years too. So if you think that an investor could just simply go and buy the S&P 500 or the SPY, then they would have made more money and they wouldn't have had to pay these fees to Berkshire Hathaway. So I do think they're under a little bit of pressure. Another expression, they're under the cosh a little bit. And I think that would entice them to make more deals. But finally, given the fact that his famous quote, again, be fearful when people are greedy and be greedy when people are fearful, I think his whole thesis and point is when this market does sort of dip down, which I think we will get in the coming years for sure, and I think that's when he's going to start buying. I think he sees this recent dip from basically March up until now, and this is more of a correction and the dip is not finished. And I think that's where he's going to look at getting in. We don't know what's going to happen with travel. We don't know what's going to happen with jobs. In the UK, pubs are opening now, or bars if you're in America, and they're starting to reclose because of COVID again. We don't know how far this pandemic is really going to reach and what the real impact is, to be honest. So I think he's sort of patiently sat on the fence waiting to pounce on the right sectors. And I think this purchase of Dominion Natural Gas, he sees that every year in the winter especially, people need gas. And he's just going to be transporting it. He's going to be the middleman, and it's going to make a profit. And I think that's what he's going to do. He's going to turn it around a little bit and then maybe look at other sectors, who knows. But in the meantime, people are going to need gas, especially for heating and things like that. So I don't think it's necessarily an aggressive purchase. Do I think there's better ones out there? Potentially, and maybe I'll do a future video on that. Now, given all that, I think that, you know, the sector is sort of right at the lows, and I think that the sector for sure will have, you know, in the next 20 years, some point where you can make a profit. I think it's a sort of no-brainer, and especially if you're the middleman, you've got companies on the upstream and downstream, both struggling, but they all need to transport. So I think that he is quite sensible in that aspect of not going into, you know, BP, Shell, or something like that. He's gone into a middleman, which isn't really affected necessarily too much by the price, more about production, and production is going to continue again for the next couple of years at least. What are your thoughts on this? Let me know in the comments. So finally, I'd like to leave you with this question. Has Warren Buffett lost it? Should he have went to tech? Should he have kept his airlines? I want to know if you think buying this natural gas pipeline is a good buy or a bad buy. Has Warren Buffett lost it? Yes or no? Let me know in the comments, and thanks very much for watching. Please do subscribe, turn on the bell, and hit that like button, and I'll see you in the next one.